Section 1. Introduction. India's new income tax bill, 2025. India has introduced a new income tax bill in 2025, aiming to simplify the tax system and improve clarity for taxpayers. This bill introduces significant changes that impact various aspects of income tax, particularly for Indian citizens working overseas. This new legislation has sparked considerable interest and discussion, particularly among non-resident Indians, individuals seeking overseas employment, self-employed professionals operating internationally, and remote workers. This video will delve into the key provisions of India's Income Tax Bill 2025, focusing on its implications for overseas employees. We will explore the changes to tax residency rules, the simplified tax regime, and the taxation of virtual digital assets. Furthermore, we will examine expert opinions on potential ambiguities within the bill and provide actionable advice for individuals planning to work abroad in light of these new regulations. Understanding the nuances of this new bill is crucial for overseas Indian citizens and those considering working abroad. By shedding light on these changes, this video aims to provide clarity and guidance for individuals navigating the intersection of global employment and Indian income tax regulations. The goal is to empower individuals with the knowledge to make informed decisions regarding their careers and financial planning. Section 2. Defining tax residency, the 182-day rule and its exceptions. One of the most significant changes introduced by the Income Tax Bill 2025 pertains to the determination of tax residency. The bill introduces a more stringent 182-day rule. This rule states that an individual will be considered a resident of India for tax purposes if they spend 182 days or more in the country during a financial year. This change aims to establish a clearer framework for determining tax liability based on physical presence in India. However, the bill also outlines specific exceptions to this rule. For instance, individuals working on international assignments for the Indian government or Indian companies may be exempt from the 182-day rule, subject to fulfilling certain conditions. Additionally, there are provisions for individuals working on offshore projects or those with specific types of employment contracts. Understanding these exceptions is crucial for individuals who may fall outside the standard residency criteria. The introduction of the 182-day rule and its accompanying exceptions represents a significant shift in how tax residency is determined in India. This change aims to align India's tax laws with global standards and address the evolving nature of work, particularly with the rise of remote work and international assignments. However, the nuances of these exceptions necessitate careful consideration and, in some cases, seeking professional advice to determine their applicability to individual circumstances. Section 3. Impacts on overseas employees navigating the new terrain. The changes brought about by the Income Tax Bill 2025 have varying impacts on different groups of overseas employees. For non-resident Indians who typically spend less than 180 days in India, the impact may be minimal. However, NRIs with income sources in India, such as rental income or investments, will need to reassess their tax liability under the new regime. For Indian citizens seeking employment opportunities abroad, the 180-day rule requires careful planning. Factors like the duration of the contract, potential for visits back home, and the possibility of remote work arrangements need to be factored in to determine tax residency status. Self-employed professionals and freelancers operating internationally also need to assess their residency status based on their physical presence in India and their global income sources. Remote workers, a growing segment of the global workforce, face unique challenges under the new bill. The location-agnostic nature of remote work requires careful consideration of tax residency rules in both the country of residence and India, especially if they are Indian citizens providing services to Indian companies. Understanding the implications of dual taxation and potential tax treaties becomes crucial in such scenarios. Section 4. Beyond residency, other key changes in the 2025 bill. Beyond the changes to tax residency, the Income Tax Bill 2025 introduces other significant modifications. The bill simplifies the tax structure by reducing the number of tax slabs and offering taxpayers the option to choose between the existing tax regime and a new, simplified regime with lower tax rates but fewer exemptions and deductions. This aims to make the tax filing process easier and more transparent for individuals. Another significant change is the introduction of a specific tax regime for virtual digital assets, including cryptocurrencies and non-fungible tokens, or NFTs. The bill proposes taxing income from the transfer of virtual digital assets at a specific rate, recognizing the growing importance of this asset class in the global economy. This move provides much-needed clarity for individuals and businesses involved in the virtual digital asset space. Furthermore, the bill aims to reduce litigation by introducing measures to streamline the tax assessment and dispute resolution process. It also enhances the use of technology in tax administration, making it easier for taxpayers to file returns, make payments, and interact with tax authorities online. These measures aim to create a more efficient and taxpayer-friendly tax system. Section 5. Expert Opinions, Addressing Potential Ambiguities. While the Income Tax Bill 2025 aims to simplify the tax system, experts have raised concerns about potential ambiguities that may require further clarification. One such area is the definition of income accrued or deemed to accrue in India. This definition is crucial for determining the tax liability of overseas employees who may have income sources both within and outside India. Another area of concern is the lack of clarity regarding the taxation of employee stock options, or ESOPs, granted by foreign companies to Indian residents. With the increasing prevalence of ESOPs as a form of compensation in the global workforce, clear guidelines on their taxation are essential to avoid disputes and ensure fairness. Experts recommend that the government issue comprehensive guidelines and clarifications to address these ambiguities and ensure a smooth implementation of the new tax laws. Clear and consistent communication from tax authorities is crucial to build trust and confidence among taxpayers, particularly those residing overseas and navigating the complexities of international taxation. Section 6. Planning to work abroad, Advice for individuals. For individuals planning to work abroad, careful consideration of the Income Tax Bill 2025 is paramount. Before accepting an overseas assignment, it is essential to thoroughly review the employment contract, paying close attention to clauses related to residency, taxation, and any potential double taxation avoidance agreements between India and the host country. Seeking professional advice from tax consultants or chartered accountants specializing in international taxation is highly recommended. These experts can provide personalized guidance based on individual circumstances, ensuring compliance with both Indian tax laws and the tax regulations of the host country. Maintaining detailed records of income, expenses, and travel dates is crucial for demonstrating residency status and supporting tax filings. Proactively engaging with tax authorities and seeking clarifications on any ambiguous aspects of the new bill is advisable. Staying informed about any updates or amendments to the law is crucial for maintaining compliance and avoiding potential penalties. By taking these proactive steps, individuals can navigate the complexities of international taxation with greater confidence and minimize potential tax liabilities. Section 7. Conclusion, Embracing Clarity and Seeking Guidance. India's Income Tax Bill 2025 represents a significant step towards modernizing the country's tax system and aligning it with the evolving landscape of global employment. While the bill introduces greater clarity in certain areas such as tax residency and the taxation of virtual digital assets, potential ambiguities require further clarification from tax authorities. For overseas employees, understanding the nuances of the new legislation is crucial. Seeking professional advice, maintaining meticulous records, and staying informed about any updates or clarifications are essential steps for ensuring compliance and avoiding potential tax liabilities. By embracing a proactive and informed approach, individuals can navigate the complexities of international taxation and make informed decisions about their careers and financial well-being. Do you think the new residency rule is fair? Share your views in the comments. And don't forget to like this video, subscribe to Living Matters, and hit the bell icon for more updates on finance, lifestyle, and current affairs. Share your perspectives and experiences in the comments section below.